Hello, everyone. Welcome. My name is Raul Melendez, and this is Public Finance and Budgeting. Today, I would like to begin with today's presentation's overview, which consists of non-tax revenue source used by cities. City of Beaumont, California, most prominent non-tax revenue fiscal year 2024. Why City of Beaumont, California relies on these revenues, recommendations, and a conclusion. According to Mikesell and Roth 2024, cities rely on several primary non-tax revenue sources. For example, user fee or charges for service such as utilities, recreation programs, and permits are among the most common and help cities recover costs directly from users. Sales by public monopolies, including water, transit, and electricity services, generate revenue while maintaining essential public operations. Cities also collect licenses and permits like building permits and business licenses to regulate and fund services. Fines and forfeitures, including parking fines and code enforcement penalties, provide additional revenue streams. Intergovernmental revenues, such as state and federal grants, support programs without burdening local taxpayers. Cities also earn interest income and rent from city owned properties and impose special assessments or impact fees to fund roads and infrastructure projects. Although these sources allow cities to diversify revenue, recover costs, and reduce reliance on taxes altogether. So, based on the City of Beaumont, California fiscal year 2024 annual comprehensive fiscal report, and based on the statement of revenue expenditures and changes in fund balances for total government funds, the number one source is licenses and permits totaling over 22 million 500 and 22 million $52,807, including the large development impact fees. This falls under the concept of growth pays for itself strategy, where fees are paid by developers to fund new infrastructure like roads and fire stations. The second largest non-tax source is intergovernmental revenue at over or at 13,165,592, representing the grant and shared revenues the city receives from the state and federal government, making this money crucial for funding specific programs and meeting government mandates. The non-tax revenue in third place is use of money and property, bringing in 10,210,898. This is composed almost entirely of investment earnings. Since the city holds large balances of cash, particularly the restricted development impact fees and other capital project funds, investing these funds generates substantial interest revenues, making the source sensitive to the economic climate and interest rates. And the fourth non-tax revenue source being charges for services, bringing in 1,488,996, covering fees for general city functions such as planning and recreation programs. Next, we have why Beaumont, California relies on these revenues. Some of the reasons for reliance on non-tax revenues. The city of Beaumont, California relies on the non-tax revenue sources to support financial stability and reduce dependence on fluctuating tax revenues. As previously stated, also according to Mike Sell and Ross 2024, cities often use user fees and charges to recover costs directly from service users, which ensures fairness and accountability. The city of Beaumont relies on non-tax revenues primarily for financial stability and risk management. For example, the use of development impact fees to ensure new development pays for its own infrastructure, protecting its existing taxpayers. The concept of again growth pays for itself. Employing user fee to recover costs directly from service users, ensuring fairness and preventing the general fund from being depleted by enterprise operations. Also, maintaining a mix of revenue sources to shield the budget against economic downturns and fluctuations in local taxes, resulting in fiscal diversification. And then securing intergovernmental grants to finance specific state and federal programs without increasing the local tax burden. My recommendations consist of the City of Beaumont continuing using its current mix of non-tax revenues, but regularly review user fees to ensure they align with the true cost of services. Also recommending a moderate adjustment to fees and expanding the use of grants to reduce pressure on tax revenues while maintaining affordability for residents. And lastly, maintaining a diversified revenue structure supports long-term financial stability. This concludes my presentation. And here is the reference of our course textbook supporting the topic. Thank you so much for watching.